The greater Cincinnati housing market has hit a new price record. Hi, I'm Scott Oyler with Oyler, Hines and Banker Realty, and today we're breaking down the stats for the first half of the year in 2024. It's hard to believe that we're already here. This year's flying by. But what is this record we're talking about? That's right, the median home value crossed over $300,000 for the first time in May of this year. Now, the last time we had a threshold of 200,000, that was only back in May of 2020. So we've gone up $100,000 essentially in median home value in 4 years. So let's break things down of where pricing stands through the first half of the year. So June numbers are back and the median home value is $300,500, and that's up about 5% from the same time last year. So that's overall existing, new construction, single family and condo. Now we're gonna kind of break it down into 4 different categories, okay? So the first is gonna just be existing single family homes, and the median home value is currently at $306,000. Now, if you're looking at new construction only, the median home value is $429,000. And if we move over to the condo market, the median home value for a condo is $230,000. And for a new construction condo, that median home value is $353,000. So let's talk about the median days on market. And I tell you what, even though we had higher interest rates, right? Everyone thought that would really cool things down a little bit. There was still plenty of demand. And the median days on market hovered around 3 in greater Cincinnati for most of the time. The last few months it's jumped up to 4, right? So I always joke around that, if I'm buying something in Amazon, I may have it in my cart for like a few days or something like that, do a little bit of research, come back and then buy it, on a $10, $20 item. What's challenging on a house in the first half of the year is if you are interested in that house, you had to make an offer at that time, because if you went back for a second showing, that house may be gone. That's how quick things were moving. So those are our median days on market. Now, we're going to talk about our forecast on some of this here in a little bit, but just kind of recapping that first half of the year. So let's talk about the inventory side of the equation. And inventory remained relatively low, but a lot higher than what we saw last year. So at the end of June, we had about 2,300 active listings on the market. And this is in the greater Cincinnati MLS. All these stats are from the greater Cincinnati MLS. And there's about 2,300 active listings at the end of June. And this is up about 34% from last year. But what we also saw was a lot more demand this year. And that's what's kind of kept things in balance and prices moving. And that demand was basically people have kind of come to the realization that rates have kind of stayed where they are. They've accepted that rates aren't going to drop where they are. They've been pretty consistent this year, although a lot of people thought rates were going to come down, even us. If you look at our prediction for this year, we thought that rates were going to drop down, and they certainly didn't. But that did not keep the buyers away. So speaking of rates, let's talk a little bit about those. Once again, I know we predicted that rates were going to go down earlier in the year. A lot of people got this wrong because we just could not get inflation under control. And really, they've hovered around 7% for most of the year. They may drop down to 6.75, go up to 7.25, but for the most part, they've kind of hovered in that range. Been a little volatile throughout the year. And what we're talking about here is a 30-year fixed rate mortgage. So what do we expect for the second half of the year? The one thing I'm noticing is we're getting back to normal seasonality. We saw this kind of pre-COVID. COVID really put a wrench in things where you kind of could take seasonality and throw it out the window a little bit. And now we're starting to see those trends of normal seasonality where your March, April, May, June, very, very busy months. July, people are on vacations and people are planning on going back to school. So if you're a buyer and you may have missed out on those opportunities in a competitive market, as you get into the second half of the year, we tend to see that the market is a little less competitive. While I think we're going to continue to see prices rise as those closings hit in July and August, but keep in mind, those contracts were probably signed 30, 60 days ago. So new contracts what we see won't have as much competition, and I think we'll start to see prices level off. Not saying they're going to go down by any means, but just level off where they aren't going to keep accelerating the way they have in this calendar year. Our other thoughts are around interest rates, and we get this question all the time, and I feel like every time I answer it, I'm wrong. So I want to be very careful because it's so hard to predict interest rates and what's happening, but we feel that interest rates are going to stay relatively the same. It's going to be a little volatile. We think that they may go down a little bit, they may go up, but mostly they're going to hover around that 30-year fixed rate's going to hover around that 7% mark, maybe come down a little bit off that, maybe go up a little bit off that. I don't see a big change in the election that's going to have a big impact on the real estate market. But most importantly, it is very important that if you are interested in buying or selling, make sure you're getting great advice from a real estate expert. And if you have any questions about the real estate market, you can always reach out to us at info@oylerhines.com. So if you've liked this video, make sure you like and subscribe our channel for more great videos just like this, as well as property tours and other informative videos. And I'd love to see your comments down below of what you think the real estate market has in store for us in the second half of this year.